Good evening, ladies and gentlemen. I'm Kritika, moderator for the conference call. Welcome to IPCA Laboratories Q1 FY23 earnings call hosted by DAM Capital Advisors. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Nitin Agarwal of DAM Capital. Thank you, and over to you, sir.
Thanks, Ritika. Hi, good evening, everyone, and a very warm welcome to IPCA Labs Q1 FY23 post-earnings conference call hosted by DAM Capital Advisors. On the call today, representing IPCA Labs, Mr. A.K. Jain, Joint Managing Director, and Mr. Harish Kamath, Corporate Counsel and Company Secretary. I'll hand over the call to Mr. Jain to make the opening comments, and then we'll open the floor for questions. Mr. Jain, please go ahead, sir.
Thanks, Nitin, and DAM Capital for organizing this call. Good afternoon to all participants, and thanks for taking out time and joining us for Q1 FY23 earning call. Today's earning call and discussions and answer given may include some forward-looking statements based on our current business expectations. This must be viewed in conjunction with risk that pharmaceutical business faces. Our actual future financial performance may differ from what is projected or perceived. You may use your own judgment on information given during the call. Domestic formulation business for Q1 FY23 has delivered a growth of around 12%, from around 613 crore to around 685 crore. Domestic anti-malarial business has shown a significant decline in first quarter by almost around 68%, and business from 39.5 crore last year first quarter is reduced to just around 12.6 crore. So excluding anti-malarial domestic formulation business, other therapies has delivered almost around 17% growth during the quarter. This is in spite the WIP-based pricing increase on domestic scheduled formulation benefit was not fully available during the quarter because we were maintaining around 2 months inventories around that time. So the prices has become effective only from somewhere in June. We expect that domestic formulations to business to grow around 12 to 13% in current financial year, FY23. The lower projection for growth in this business is on two accounts. We also have higher base of anti-malarial business in second quarter and higher base of antibacterial business that we had last financial year due to COVID-19. Our export formulation business by around 14% for this quarter. The business in Sri Lanka, Russia, Ukraine declined for the quarter because of geopolitical issues and disturbed market. For FY23, this business is expected to deliver around 13 to 15% growth. Export generic business for the quarter has declined by around 2% to around 213 crore from around 217 crore. Is mainly because of decline in UK business, because of issues with we have stopped dealing with one of our distributor. We are confident that in spite of some decline in UK business for the business overall for FY23, the generic business is expected to deliver around 5% growth. Institutional export business of anti-malarials has declined by around 17% in this quarter to around 97 crore from 116 crore. We have pressure on this business in FY23, and there may be some decline, maybe around 8 to 10% in this business in FY23. API business has shown decline of around 10% for this quarter, is mainly because of sales return of losartan, and now EU has come out that there is no risk of azido impurity level that we had earlier in our earlier produced batches. We have further improved our manufacturing processes to reduce the impurity level to a drastic low level, And this business is expected, the API business is expected to deliver around 5% growth in the current financial year. Overall material cost to overall total income has gone up to almost around 34.71% for FY23 as against 33.39% on same period last year. There is an increase of almost around 1.33% on 1.33 on this. Inventories of higher cost procurement are consumed for this quarter. The cost has started coming down. There is a softening trend in the prices of both raw materials and packing material. But inventories which were procured earlier was at higher prices, so mostly that got consumed in this particular quarter. Expenditure on fuel, travel, export freight are high to a very significant level, and the increase in the cost compared to FY22, at the same time, increase in number of field staff as well as lower base of expenditure last year due to COVID Delta wave resulted in the higher sales promotion and marketing cost. Practically, field staff has worked in last financial year for only 2 months, so that travel and everything was low. At the same time, we have also increased our field staff in current financial year. So that is also increasing the promotional cost as well as our field cost. The EBITDA margins for the quarter has declined to around 19.5% in our standalone accounts as against 27.1% in the same quarter in last financial year. We have revised our EBITDA guidelines for FY23 as against 23% last year for the whole of the year, 23.25. Earlier revision was around 22%, but looking at now the inflationary pressure, we are revising our EBITDA guidelines to around 21% for financial year. This also is there is a pressure on additional cost due to field staff, the overall increase in the field strength. On taxation front, our post-tax profit will decline due to opting for 25% tax as against 18% tax earlier paid in cash, and balance tax was paid through past MAT credit available to the company. Since we are now opting for 25% tax, the MAT credit would not be available, and our overall current tax is expected to be around 27% because a lot of those kind of costs which are there on marketing and sales promotions and CSR and all those will get disallowed. So as against 25% tax, our overall current tax is likely to be around 27.5% in the current financial year. The deferred tax provision for the quarter is higher by around 8.76 crores. This is mainly because whatever earlier MAT credit was there as a part of books and there was higher deferred tax liability was there. The deferred tax liability is coming because we have at lower level because of 25% tax, and the MAT credit that got set off, and there is a difference of around 8.76 crore that has been charged to the P&L account as a part of deferred tax liability, and therefore deferred tax liability in the current quarter is higher by around 8.76 crores. Given the overall business scenario and some details, I now request participants to ask questions.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity. Sir, just a couple of questions. First of all, let's say the European business, which is seeing a kind of a pressure in terms of growth, largely led by UK. So could you give some more color, sir? Like, see, we had registered around 43 odd product in our own name, or rather converting those registrations to our own name. So what is the stage of conversion there, and when do we really see the revival of the business in the UK? Something on that side.
Let's say by the current year end, probably we will be more or less, there will be some decline, but overall we will be able to recover in the current year itself as against 43 dossiers, because all these dossiers were registered in distributor's name. So now we have to get our own registration. So we have practically up to now we have launched 6 products only in UK, and almost around similar number of approvals has recently received. So next, I think in few months time, almost around 5 to 6 more products will be launched. With that, almost around 80-85% of the business, whatever of distributors and our own we were doing, that we will be able to recover. And in the course of the year, we expect around 8 to 10 approvals more. So depending on that approval, hopefully the business would be recovered. And it's only, I think, whatever decline is, small decline may remain, that will remain in current year. From next year also onwards, this business will start doing very well.
And is it fair to believe that this 20% kind of a decline in the overall European business in FY22? Because last to do with the European disruption, UK disruption rather.
That was only last year that from last year it has started, because the distributor, we had business relations for almost around more than 20 years, and we had a significant business with them. But since their financial position deteriorated and their payments started coming late, and as a result of that, we never wanted that that business cycle should disturb that way because of payment. And then we stopped dealing with them because the situation was not improving from their side. So it's only because of payment. There are not as such dispute with the parties or anything of any kind of litigations or those kind of things. It was only because of payments not coming in time. We have said that we will not be able to do business, and then we'll start our own distribution in UK. So that's what we have done.
Okay. The second question is on the domestic formulation business, sir. So we had indicated about around 1,200 odd people addition for the current year. So what extent that we have done, and we are also indicating about the price hike, but possibly in the opening remark you commented something that okay, the full benefit of the price hike was not visible, but whether you were able to take the price hike of around 6 to 7% on the entire non-scheduled basket, sir?
Yeah, that's what is going to happen in current year. And in fact, domestic market we are doing very well. More particularly, we have increased the people in metro cities, because almost all bigger cities has expanded largely, and their populations are increasing in these cities. So our more focus is now towards the city side, and we are increasing our coverage in cities in most divisions. And even in the first quarter itself, our by and large, say Delhi, Calcutta, Mumbai, Hyderabad, and Bangalore and Chennai, these cities has registered almost around 23% growth because of overall increase in the field sport. We have improved our rating. We also improved our market share in domestic market. And as you have seen that excluding anti-malarials, our growth is almost around 17%. And anti-malarial pie in this quarter has, I think from 6%, it has come down to 2% in for the quarter. But our second quarter base of anti-malarial is normally very high, because it's around that time all anti-malarial sale, but we are not seeing that kind of sales in current year. And we see that there will be a significant decline in anti-malarial base even in the second quarter of the current year. And therefore, even though our other businesses will move up, but the overall growth will come down, because both your anti-malarial and antibacterials, these are the two therapy antibacterials, because of COVID-19 and Delta wave and subsequent infections and all were very, very high. And therefore, antibacterial sale last year for whole industry was good. So, and this year, more particularly for your azithromycin, the business was, we also had azithromycin brand, and that brand is declining current year because of, it was significantly used for COVID-19 treatment. So, those issues will continue, and because of that, we have taken a overall, let's say, growth guidelines to 12 to 13% for this year, as against higher guidance of 13 to 15% kind of guidelines. So because of these two declines. Yeah. But overall in domestic market, we are doing very well. And as against 1,200 people, overall increase almost around 800 people are already recruited. And I think balance will get recruited in next two quarters, depending on the overall progress and all. So almost around 1,200 people will increase in the current year. That will also put little more pressure on our field operating cost, as well as on sales promotion cost. These costs will be higher, and normally it takes around 2 years time for people to become productive. So
yes, sir.
Hopefully, because domestic, they are doing very well. Our market shares are increasing. Most therapies are doing well. So it's the right time for us to increase our overall penetration in India, and that's why this step is taken.
So just last one question. So obviously the elevated cost, input cost, logistic, and all that has been a kind of a concern area in some time. And you are also kind of indicating a lower margin for the current year from the earlier guidance. So about 100 basis point kind of lower. So here the commissioning of the Devas plant, and whether the likelihood of benefit flowing from the integrated operation due to that new plant, whether that will not be seen this year, and this elevated cost structure is likely to continue entire of this year. That is why you are guiding this way, or anything else that you're thinking about it for cutting your margin guidance?
Let's say the cost heads. The major cost heads are, like say, one is fuel, which has moved up significantly. Another is field cost has moved up. Sales promotion cost is moving up. Travel cost last year was hardly any. And now, let's say, international and domestic travels of our corporate staff and your sales promotion teams and sales team and international marketing team, all those travels are happening. So that cost is moving up. And another is freight. So these are the costs which has mainly contributed. Otherwise, all costs are more or less at the same level. But these are the costs which has in the first quarter has almost added around 70 crore to the overall cost, which includes fuel itself is around 12 crore, freight itself is also around 11 crore. Field staff cost has gone up by almost around 14 crore, and balance, I think travel itself has gone up by around 6 crore, and balance from sales promotion cost. So I would say that as far as fuel is concerned, in first quarter last year the base was lower. We were procuring coal at around 7 to 8 rupees, which has gone to 15, 16, 17 rupees in the in between period. Now coal cost is coming down. It's around 12 to 13 rupees kind of. From that base it has come down. But from a base last year of 7, 8 rupees, it is still at elevated level, and it's not likely to come down so drastically. Cost is coming down every month, but it's not likely to come down to anywhere level near the level which was prevailing in the first quarter last year. So the fuel cost definitely will remain high. Freight, I would say that container cost, which has gone to 8,000 to 9,000, has come down by almost around $3,000 now. But the cost is coming down, but it's also not likely to be what was practically before 1 year, those kind of cost which was prevailing, and cost will remain elevated. As far as my field staff is concerned, that cost will remain high because we are adding almost around 1,200 people, and also because of all these fuel costs as moving up, their traveling allowances and all those kind of, say, daily allowances have moved up. So that cost definitely will remain elevated, will not come down. First quarter impact is higher because for 30 to 40 days the field staff was sitting at home. There was no travel or nothing, work or no sales promotion because of Delta wave around first quarter of time. And therefore, this year cost is not of, we are comparing 2 months cost with practically 3 months cost. So the cost increase in the first quarter is higher as compared to so in future quarter the increase may not appears to be that high, but yes, this cost will remain high because of overall increase in people and also increase in that not only your traveling cost, your ticket cost and all that, their allowances has also moved up because of higher petroleum costs. So that will remain elevated. Yeah. And
Sure.
freight is coming down. Freight is coming down, but still it is nowhere nearer to what it used to be there earlier. So cost pressure will continue to remain. Looking at the cost pressure and looking into overall business and everything, as against 23% kind of EBITDA, 23.25% what we had in FY22. Our earlier guidance was 22. But looking at overall overhead and overall field staff increase and other costs, we have further revised our whole working, and it's coming out that I think probably we will be able to achieve around 21% EBITDA for the whole of the year. So EBITDA from our last financial year, it's going down by almost around 2.25%. It's not 1%. 1% is from earlier guidelines.
Okay. Okay. Sure, sir. I have a couple of questions. I'll be in the queue, sir. Thank you.
Thank you, sir. Next question comes from Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thank you, sir. Good afternoon. Just clarification. So your EBITDA margin includes other income, right? I mean, then only we get 19%. So adjusted for forex, etc., you are at 17.9%.
Yeah, that's
okay.
that's how we calculate. Yeah.
And the other clarification is you mentioned that most of the high cost inventory is largely consumed in this quarter, and the resultant would be that gross margins would likely to come back to 66, 67, or it will have a step function?
Yeah, gross margin definitely. Costs are coming down. It's definitely there, but they are not near to the level which was there earlier year. But let's say on domestic market, like say your this scheduled formulations, now it will be available for whole of the year. That price increase and other price increase will also be in the region of almost around 7% in current year. So overall,
yes,
it will have an offsetting effect of that. So that also will come in the overall in margin calculation.
Any expectations, sir, on gross margin?
Overall, I am not looking at much of gross margin pressure. The more pressure is on the account of the overheads. And also there are, I think we have done almost around significant improvements in three of our major API in cost reduction. And that cost reductions are almost accounting for around 20-25% of the cost. And they are major selling APIs where we have the new processes, and those validations and submissions to the regulatory authorities are happening now. So our overall there will be overall, I think maybe somewhere in the third quarter and fourth quarter, some of the effect of that also will start coming in. Plus there were around two big intermediates we were importing from China. That we have completely internalized now, and there will be no more imports of those except if there is a higher consumption, then some quantity we may import from, and that is coming at an overall lower cost. Our own internal manufacturing will be at a lower cost, so that will also have some kind of positive impact overall on margins. So as far as gross margins are concerned, I am not looking for a bigger pressure. Bigger pressure is on account of cost increase because of overall increase in number of field staff, and still the cost of fuel, travel and freight, they are at elevated levels.
That is clear, sir. So gross margin actually will improve from here, is what I understand. And you have given 21% margin versus 19% in Q1. So the remaining 9 months margins should be healthier because of the reasons you said about cost reduction, price increase in India. Are there any big pieces which we are missing?
No, that's what I had talked about. Yeah.
Okay. And second question is on, the new initiatives you are taking for the India business. Currently, we see you are having a very strong growth in pain management, cardiovascular. But have we looked at, new initiatives, new therapies, new product launches in India and export markets? Anything, new segments we are looking at India, API and export markets, sir?
I will like to correct you a little. let's say pain, we are continuously doing well. Even in the first quarter current year, we had 20% growth on pain. Cardiovascular, our growth was lower. In fact, cardiovascular anti-diabetic in first quarter, we just had around 5% growth. The reason for that is that we have started 2 more divisions. And with that, there was, whenever you do the restructuring, there are disturbances because your doctor-product relationships and all those get disturbed, and for some period, some coverage get missed, and all those issues happen. So we and that as we were knowing that since the first quarter, because of the overall reshuffling in the overall cardio basket, and that 2 more divisions we have started mainly because the huge amount of good number of products which are blockbusters are getting off patented and their launches, and we are doing very well. Our overall cardiovascular reach is improving at consultant level and all, and therefore we wanted to have furthermore penetrations in these markets, more particularly to increase our overall chronic basket coverage. And therefore this initiative is taken, but for short-term period there is this kind of disturbances there in first quarter that we had lower growth. Hopefully we will do better in the second quarter and now onwards. So in fact our other therapies growths are very, very good. Antibacterials also has declined in this quarter only because of azithromycin that last year first quarter we had almost around 48 crore business of antibacterial, as against this year we did only 40 crore. So these 2 therapies, one is antibacterial and anti-malarial, both has declined, and cardiovascular has had lower growth because of restructuring. In spite of that, we have 12% growth, and excluding anti-malarial itself, we have 17% growth. We have overall improved our market share in India, and market share has become almost around 1.85% now.
Okay, and exports and APIs, are any new initiative, new product launches, or anything in the pipeline?
That's a continuous process is there on new product launches and all, and we are looking for much higher significant business increase in API in time to come with Devas commissioning and with a lot of products which we have commercialized now, on which a lot of sampling and other things are done. Hopefully in 3-4 years time our API business itself should tell almost around 3 years time or 4 years time, maybe around 2,000 crore basket.
Okay. And sir, lastly on fiscal 24, since so much development is happening, how do we see the margin playing out for fiscal 24? Just little color will help.
Let's say by and large this 1 year there is a transition period because of all these 1,200 people additions and that cost. That is what is putting larger pressure, and hopefully by year end a lot of good tractions in the market with these people additions will start, and next year should be much better because now cost pressures are also reducing, particularly on your chemical side and on intermediate side, and our own production of certain intermediates and cost reductions on certain API which are larger in volume terms. So that will
can we come back to 23,
again to the earlier level.
23-24%?
Around 23 is reasonably possible. We are not done the working right now, but it's possible to achieve that.
Perfect, sir. Thank you so much and all the best.
Thank you, sir. Next question comes from Chirag Dagli from DSP Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, can you comment on your margins in India currently versus pre-COVID level?
No, as far as India is concerned, gross margin there is not much of a difference. Issue is only increase in the overhead because of additional people what we have added since Q4 of the last financial year. This is I am talking about India formulation business.
Correct. So just
Sorry
broadly.
Sorry to interrupt, sir. Sir, your voice is too low. Could you please be louder?
Hello, is it better now?
So there's some electric noise from your line, sir.
There is lot of disturbance, sir.
better now, sir? I'm actually on my handset. Okay.
No, still there is a lot of disturbance.
I will come back in case. I will come back.
Yeah, thank you.
Thank you. Thank you.
Thank you, sir. Next question comes from Priya Arvani from Perpetual. Please go ahead.
Hi, sir. So first question is on, just a clarification on institutional sales. So you mentioned there will be some pressure in FY23. So what's the guidance exactly you said for FY23?
Actually, we had not given a very big growth numbers, but unfortunately, looking into the current scenario and sourcing and fund allocation and other things by institutions, we feel there could be some reduction in this business compared to the previous year.
Okay. And so second question is on branded formulation business on export side. So you said there was a decline in business in Russia, Ukraine, and Sri Lanka. So how is the situation now, like in July or maybe in mid-August?
Overall, I think we have guided for current year that this business will grow almost around 15%, 13 to 15%.
13 to 15%.
So business in Russia is happening good. There was, as I have talked in earlier, I think when we had, I think our Q4 results, that initial period in Russia, the currency fluctuation was very high. Currency went up to very, very high level. The ruble was almost around 120, 125 level. At that time, we were little slow in shipping. So practically, we have lost a lot of time in April. So practically, in April, there was hardly any shipments were there. Since because that would have added if from the past levels of currency, if this kind of levels were there, and for some time we have stopped the even billing there because in Russia distributor we have said, because otherwise reimbursement of cost difference would have been too high to them. If we had sold at 120 level, then practically they would have asked the reimbursement of that cost difference to us. So when currency started stabilizing around at a lower level, then we started billing, and then thereafter the traction has been very good. In fact, Russian markets are doing very well. So business definitely are improving. In fact, that inventory level in that market has significantly come down, and therefore business will again move up. It's only in case of Sri Lanka, we have no overdues in Sri Lanka for the matter, because we are getting all the payments in time. Mostly the businesses are happening in LCs, and we are distributor. They have large, very large network and lot of exports also they have, and therefore they are able to overall get the foreign currency and do the business. But businesses are not happening because it's also people's affordability level. So businesses are not happening to the level which was happening earlier. So there will be definitely some reduction in Sri Lanka market. In first quarter itself, I lost a business of almost around 5 crore in Sri Lanka. So overall, all markets are doing well, and hopefully we should be able to do almost around 13 to 15% kind of growth in overall in branded promotional market.
Okay, that's helpful. Thank you so much.
Thank you, ma'am. Next question comes from Kunal Dhamija from Macquarie Capital. Please go ahead.
Thank you for taking my question. So first one, clarity on the EBITDA margin guidance. You said 21%, but is it including the other income, etc., that guidance?
That I have clarified that normally we include other income. So I think probably your method is you take exclude the other income. Yeah. There are both other income. Yeah.
Okay. And on the manufacturing, on the other expenses side, is the Devas commercialization already included in the quarter one base, or there is some more overhead that can come from there in future quarters?
Devas, initially we started production of 2 intermediates. We have just received the drug license now. In I think last 10 days back we have received drug license, and now the process of establishment batches of API as well as their validation batches, so that process will happen of around 5 to 6 API. So from now to March, the Devas plant will be doing only the the establishment and validation, establishing the entire chemistry. They will take the transfer of technologies on your entire analytical methods and manufacturing and all those kind of practice training. And by and large, there will be only the validation batches would happen because our first priority to do the validations and thereafter do the stability, because without stability from that plant, you can't ship anything to anybody. So next 6 months is practically whole plant will be busy only on the establishment and validations. And once you have, let's say around 6 months, your stability data, then on the API produced, then you can give a higher kind of your stability and the shelf life on the product. So actual business would start happening only from next financial year. Devas will not contribute to any kind of turnover in current financial year, because unless we generate the data, we will not be able to do business. These data will be supplied to the filed with the regulatory authorities. Then we will invite the regulatory authority for the approvals and all. But meantime, let's say India-related business and a lot of other market-related business where those approvals are not required to be taken, merely on submission of data, we can start. So those kind of business will start first. And thereafter, once regulatory inspections happens, then other market like EUs and a lot of those markets like Brazil, Mexico, those kind of markets and will be added to that. So that process, that's a process. So Devas will have to go through that process. So for some time, these kind of, let's say, operating losses would be there in that, and that is all factored in our calculations.
Yeah. Okay. And the last one on the India business. So on NLEM business, you suggested that price increases will kick in from Q2. But on non-NLEM piece, have we taken the price increase, or are they still going to kick in, let's say, in Q2 or Q3, or is it currently factored in quarter?
In India business, let's say on 1st April, as government announced the prices on scheduled formulations, we have taken the pricing, but that production started in April. And by the time, let's say, for 2 months, we have sold our old stocks off with a lower pricing so practical somewhere pricing has come effective from June and somewhere from July, but now everywhere the prices are effective. As far as the non-scheduled formulations are concerned, the prices can be taken increase can be taken in a cycle of 12 months. And most of our cycle are falling in the second and third quarter. So first quarter been that significant, but overall maybe around we have guided around 6 to 7% price increase would happen, and that some price increase has happened in first quarter also, but major increases are happening in the second and third quarter.
Okay, thank you, and all the best.
Thank you, sir. Next question comes from Dinopati Paramtil from InCred Capital. Please go ahead.
Hi, thanks for taking my question. Just 2 quick questions. Sir, any further update on our US business restarting? Anything further?
As far as the US business is concerned, whatever regulators wanted, we have already submitted to them. And for all the plants, we have made a request for inspection. They have started now visiting India, and probably the inspections have started of the companies now. So I think a lot of inspections are currently happening. Hopefully, our plants will also get inspected, but it's very difficult to say that when the inspections would happen. We understand that there is nothing pending from our side to be given to FDA. So hopefully from that, yes, inspections would happen. But when FDA, any day they can come, today, tomorrow, anytime they can come.
Understood, sir. So suppose
we are ready for that.
This, right. Suppose that inspection happens and you are cleared. Can you immediately start selling some of your old approved products immediately in the US market, or is it going to be a cycle of fresh approvals product-wise?
Let's say we are on import alert. So after inspection, there could be, suppose there are some kind of minor some observations are there. They need to be replied within certain number of days. And
No, I'm assuming, I'm talking about once everything is cleared. Once the plant is cleared, immediately your old approved products.
My disclaimer is that nobody is waiting for me. So I have to go and disturb the market and create the market again. And it's a cycle that some people get tied up for 6 months, some get tied up for 3 months. So whenever they come back for the buying, and then we start pitching. So it will take some time to get back to the market. So it's not that from there, day one, the business will start and business will start in a big way. It will take its own time.
Understood.
But we are confident that we are able to get higher businesses on those products because we have cost efficiencies on our major products and we still have cost leadership. And on those very products, we are further reducing the cost. So we have ability to disturb market big way.
Got it,
still make money.
Got it. One final question on tax rates. So you were mentioning in the initial comments about the tax, something about the deferred tax liability regarding MAT. So what is the full year reported tax rate that you are looking at for this year and also say for next couple of years?
That's what I have clarified. Earlier our guidelines was there that probably we will fall in 25% tax rate, not from this financial year, from next financial year. But Supreme Court has come out with the decisions on all the sales promotion cost of past and other things, and because of that judgment, your even past cases which are there in your appeals and all, they will, whatever where assessments are open, let's say 3 years assessment are open and there are certain assessments which are there in the appeals and all. So where for small issues there are the litigations are there, but now these cases will be looked at fresh and practically a lot of those costs will get disallowed, and therefore we thought that whatever MAT credit available with us, let us utilize that credit for the past disallowances, and therefore instead of opting for 25% next year, we have opted for this year. So there are no past liabilities. Past liabilities will get adjusted against past MAT credit available. And from this year, we will be on 25% current rate of tax. But the finance bill has changed, your Finance Act has changed practically some kind of, that there will be absolutely, when you are opting for 25%, there will be no incentive or no kind of deductions will be there. And Finance Act has also come out that whatever say brand recalls and all that are given to the doctors on small values and practically to remember the brands and all that kind of thing, that will also likely to get disallowed, and therefore that will also put an additional burden on pharma companies. So we said that as against 25% tax, our tax rate is likely to be around because of disallowances. There could also be mismatch between book depreciation and IT depreciation. So overall tax rate could be around 27.5% in current year, and that tax rate will continue. And there is some kind of, because of timing difference, there could be deferred tax, but that deferred tax amount is not very large. So overall, let's say around 27.5 to 28% would be the current tax and deferred tax in the current financial year and future financial years.
Perfect. Thank you very much.
Thank you, sir. Next question comes from Kapil Agarwal from ITIS Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah, Kapil. Yes, you are audible.
Sir, I wanted to understand a little better on what happened around the UK. From my understanding, you were partnering with only one distributor in the UK, and when you had issues with the distributor, you decided to facilitate your own distribution. So I wanted to understand what are the dynamics that would lead you to not partner with multiple distributors in the UK, and why did you decide to, instead of partnering with some other distributor, decide to distribute your own?
Kapil, we were doing business with this partner when we were nobody in UK. So our relationship with this distributor is of 25 years. So from zero, he took us till 300 crore. There was absolutely no issue. But since last 2 years, the distributor is having its own problem because he also has its own manufacturing facilities in UK because of this COVID and Brexit and all. So his own operations is also into some kind of trouble. So because of all that, the remittances from him were not coming in time. That is the reason we decided that better we start our own distribution network in UK. So that is how we started. Now we are having already 6 products in market, and another 6 products will get added during maybe in a quarter or 2. Few more products registration will come before end of this year. Another few products are under registration. So going forward, we will have a good number of our own products registered and under market in the UK. And we are very confident, and whatever business now we are doing is our own business, and it is a more predictable business, and it will grow year after year instead of depending on a distributor, and we see a good scope in UK market.
Understood, sir.
Also doing business in many European countries where we have multiple distributors. We have learned from UK, so you should not depend on one distributor. And actually what happened in UK, we were new and this distributor came to us, and all our dossiers, even though we developed, it was registered in his name. So because of that, we could not start our own distribution immediately, neither we could give those dossiers to somebody else. Whereas our model in other European market, we are present in many countries, we give product to multiple distributors. They have to exclusively buy from me because it is my dossier. But I am not exclusive to him. I can give same product to any other party. So that kind of a business arrangement we have in multiple countries, Australia, New Zealand, many of European countries, Canada. This is our business model.
Got it. That helps, sir. Thank you.
Thank you, sir. Next question comes from Abdul Qadir Puranwala from Elara Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So my first question is on your India business. So what is the total number of MRs do we have right now? And secondly, did we call out that the productivity of these MRs would be at par in the next 2 years?
By end of this current year, more or less we should be having around 6,000 sanctioned field strength in the market.
Okay.
Yeah.
And so on the productivity front, by what time could they be as productive as the current ones?
Let's say our current productivity is around 4 lakh rupees per rep on an average basis. There are newer divisions where productivities are low. There are older divisions where productivity is as high as 10 to 12 lakh rupees or 7 to 8 lakh rupees. So it all depends on establishment of brand by the divisions, and over a longer period of time as the business get established, the productivity keep on rising. So since we wanted to increase our penetrations, by and large these field force additions are happening in that. Number one is in existing divisions to increase the penetrations, because our survey suggested that, our own internal surveys, that overall we have lower number of people in the metro cities where we need to have more penetration. Metros, all bigger cities are growing faster, and there the doctor coverage was little lower side because of lower field people. So one, we have increased more penetrations to the bigger cities, and number two, we have started 2 more cardiac divisions. We also splitted our rheumatoid arthritis division, which is in pain management, and created 1 more division because we wanted to add more number of products in the rheumatoid arthritis segments and all, and with more number of brands coming in, it becomes difficult for a rep to concentrate on that, and in a division you can have only 3 to 4 power brands. So brands can grow only if you have there are the more number of power brands, and a rep can't concentrate more than 3-4 kind of power brands. So we needed to create more divisions in 1 more division in rheumatoid arthritis. So basically, it's more metro coverage, more your penetrations in rheumatoid arthritis and cardiovascular divisions where the addition of people are happening. Almost around 1,200 people are getting added in current year, out of which almost around 800 are already recruited. Balanced people are in the process of recruitments and all in the current financial year. So by the year end, we should have almost around 50 medical reps in the field.
Sure, sir. Appreciate that clarification. So, next question is on this API guidance for the year of 5%. Are we factoring an entire normalization of losartan in the year in this guidance of 5%?
Normally, what happens then when disturbance happens, the other suppliers penetrate in between. So somewhere some Chinese suppliers has also entered into the supply chain, and it takes some time to get back those market back. Even those, let's say, the regulators has come back and said that whatever our impurity levels were there in part per billion, earlier they have expressed that could be risk, but now they have come out that yes, absolutely at that level of impurity there are no risks. But meantime market got disturbed because of that guidelines, and it took us some time to come out with process. First we came out with a process where overall, let's say, impurities has come down, but our productivity has drastically gone down because of additional step of purifications were added. Costs were also increasing. But that process was not efficient, so we were simultaneously working to come out with newer process where we have added a process where efficiencies are gained back, your capacities are gained back, then also we improve the overall our yield factors, whereby reducing the cost. So that process registrations are on. So we will be able to aggressively compete and gain the market share, but it will take some time, and therefore we have overall lowered the guidelines for current year. And first quarter anyway we have recalls and those kind of losses are there on account of lower business and all. So looking at that kind of things, we have overall reduced our guidelines to a lower level in current year. Hopefully next year and next 3 years, as I already guided, we are looking for almost around from API side around 2,000 crore kind of business, and we have those kind of product pipeline and now capacity getting built up for our Devas plant and all. So hopefully that journey will perform. We expect to do very well on API in a longer period of time.
Got it, sir. Thank you and wish you all the best.
Thank you.
Thank you, sir. Next question comes from Nitesh Shah from Nirmal Bang Securities. Please go ahead.
Thanks. Yeah, thanks for taking my question. Sir, I just want to repeat the same thing about the tax rate. You said that increased from 25 to 27.5%, mainly because some of the asset not considered in the depreciation. Is it right?
No. Some of the expenses will get disallowed. For example, CSR expenses, correct? So in your profit before tax, you are reducing that. But for income tax, you have to add it back because it is a disallowable expenditure. Similarly, Mr. Jain said because of the Supreme Court judgment, certain small recall items, what we use for brand recall and all, those expenses may also get disallowed. Because of all this, the taxation actual rate will be 25 plus another 2.5%.
But that recalls are from the
before tax. Pardon?
Okay, that recalls are from the export market, right?
No, domestic market.
Domestic market, okay. Got it. Thanks.
So whatever sales promotion, whatever expenses you are incurring, like brand recall, you give pen, paperweight, such expenses.
Got it. So that
the name of the brand will be put.
So that is applicable for the across the industry, right?
Yes.
Across industry, every player will have to pay higher taxes because all those expenditure will get disallowed under Income Tax Act.
Got it, sir. Thanks a lot.
The law is also amended and Supreme Court decision has also come. So both are there, yeah. So Supreme Court judgment is impacting the past open assessment, and your current taxation rates are changing because of budget.
And just one more question, that 1,200 MRs you are adding, you said that would be a productive in next 2 years. So that will be a optimal productivity they will reach in the 2 years?
Normally, reps take 2 years time to become productive. That's what our past experience is there. Productive means, I would say that he start recovering his cost, his supervision cost, all the promotional costs which incur on them, and then he start contributing towards the margin. Till such time, let's say his travel cost, his salary cost, by the time he start giving us, say, the business to at a break-even level and above break-even level, it take around 2 years time.
Got it. Thanks. That's it from my end. Thanks a lot.
Thank you, sir. Next question comes from Anubhav Sahu from NB Research. Please go ahead.
Hello. Yeah, thanks for the opportunity. A couple of questions. One, I probably missed out. So what is your sales, overall sales guidance for fiscal 23? Last I remember it was 10 to 12%.
9 to 10%, yeah, growth.
9 to 10%. I mean, here also, have you revised down?
It's around that. Earlier we were talking around 10, 11%, so it's 9 to 10% now. It's a 1%
Okay.
down.
And for domestic business?
Domestic business, we have guided around 12%, yeah.
Okay.
12
Okay.
to 13%.
Okay. And if we exclude anti-malarial, any numbers you have? Or if we exclude
it will be higher, anywhere between 17 to 20%.
Okay. Got it. Secondly, sir, could you tell what would be utilization levels for the facilities which are impacted by import alerts, like Pitampura, Silvassa and all?
There are two formulation facilities. There are two formulation facilities which were having a US FDA approval, that is at Silvassa and Pitampur.
Mm-hmm.
Pitampur we are using to some extent for other generic market, whereas Silvassa capacity utilization is bare minimum, hardly anything. Pitampur may be around 30-35%. Whereas Ratlam capacity, whatever was there, which were using for US market, most of them we have now started using for other markets globally.
Okay. And for Ratlam, we also did the debottlenecking also. So
that is correct, yeah.
Okay.
And we have also come out with a new facility at Devas, which will help in scaling up my API production as and when required for US market including.
Okay. But Devas is primarily for APIs, right?
It is for API.
Okay. And so I wanted your views on Krebs Biochemicals. How do you foresee the business right now, and when can we achieve break-even at the EBITDA level?
I think Krebs is a listed company, so it's not good on my part to talk to you on Krebs. I think probably you can raise the question to the Krebs. Yeah, I will.
Okay, fine. Thank you. Thanks a lot.
Thank you, sir. We are having a follow-up question from Kunal Dhamija from Macquarie Capital. Please go ahead.
Thanks for the opportunity again. Just one on the daily allowance. You said that daily allowances for medical reps has increased. So can you just give some clarity on what was the number before and what is it now?
There are various kind of allowances. I will not be able to give number, but let's say petroleum cost has moved up. So their travel cost has moved up. So somewhere those allowances are gone up. Plus all food prices have moved up.
So daily allowance also.
Daily allowances on food and travel.
And 6,000 people in field, so that will definitely put some pressure on cost.
Food prices.
Can
the two things.
Can you quantify the allowance as a percentage of revenue?
Allowances increase are 10 to 12%. Yeah. So there are two kind of effect. One is increase in allowances, and secondly increase in field people.
Numbers.
Both are.
Yeah.
Yeah, so
both are happening simultaneously. Yeah. Thank you. Let's clarify it.
Thank you, sir. This will be the last question for the day. I would now like to hand over the floor to the management for the closing comments.
No, madam, we have answered most of the questions. No further comments from our side. Thank you. And thank you all the participants.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabas conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.
Yeah. Thank you all. Bye.